Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex and today we're analyzing a stock that I believe is great for long-term investors. We will be looking at Canadian National Railway. This stock is available for purchase on Canada's TSX under ticker symbol CNR and on the New York Stock Exchange under CNI. Given the industry CN operates in, their ownership of railways has provided them with a wide economic moat that will allow the company to be profitable for many years in the future. If you're unfamiliar with economic moats, I highly recommend that you take 5 minutes to watch my video explaining the different types and the importance of these moats. You can do this by clicking the pop-up on the screen now. Alrighty, without further ado, let's take a deep dive into an amazing buy and hold forever stock. CN is Canada's largest railway in terms of both revenue and the physical size of its rail network. Their railways span across Canada from the Atlantic coast in Nova Scotia to the Pacific coast in British Columbia. In more recent times, CN has spread into the United States, taking over the Illinois Central Railway. They serve exporters, importers, retailers, farmers, and manufacturers, moving all kinds of goods such as petroleum, fertilizers, coals, metals and minerals, forest products, grain, and automotives. CN also provides trucking and supply chain services such as distribution, customs brokerage, freight forwarding, marine shipping, and even storage space. CN has a wide economic moat. Their 32,831 kilometers of rail spread all the way across Canada and down south into the US. This network of railways has access to 3 coasts, 23 intermodal terminals, and 15 port operations. Intermodal terminals are hubs in which you can combine the use of rail, trucks, and vessels to move goods. These terminals allow for multiple types of transport to be used in distribution process. For example, moving a container from a train to a truck. CN has the only rail network that touches 3 coasts in North America, accessing the Atlantic, Pacific, and Gulf Coast. Cost and environmental advantages are the next part of their economic moat. When moving a container of goods across land, you have 2 options, truck or train. Railways consume up to 9 times less energy per ton kilometer traveled than trucks. On average, trains are 4 times more fuel efficient, can carry more freight at the same time, and cheaper for long distance. Trains emit 60 to 75% fewer greenhouse gases than trucks. As societies continue to push companies to be more environmentally sustainable, the demand to move goods by train will only grow. It is also key to note that CN is part of a Canadian duopoly, meaning there are only 2 large players in the market. In the Canadian market, CP Rail is their number 1 competitor. Given the economic moat that most railway companies have, CP Rail is definitely an option if you are looking to make a play in this industry. To replicate a railway network now would be extremely difficult for any competitors. The barriers to entry really are just too large. So looking over here at the stock quote today, we can see that CNR closed at $131.19, down 0.43% on the day. Keep in mind this was recorded on Thursday the 30th of July 2020, so this may differ slightly from what you're seeing today. CNR has a market cap of $93.119 billion, a price to earnings ratio of 25.97 over the last 12 months. This is a little higher than what we're usually looking for. We're usually aiming for under the 15 mark. However, the PE ratio does look at net income that has taken a hit due to the coronavirus. We would expect this metric to return to its historical averages in the coming months or so. The 52-week range has gone anywhere between 92 and 132.17. As we can see, it's currently sitting at the high end. CNR currently pays a $2.30 Canadian dividend, which equates to 1.75% dividend yield. Looking at the last 26 years, we can see that at these prices, CNR is trading at an all-time high. Looking at the 5-year chart, we have seen capital appreciation of 60.32%. And now looking at the 1-year chart, we can see that we are now trading above February highs. It's also good to note that we have now recovered 36.43% from our March lows. Moving into the financials, we're going to look at the income statement first. As we can see, total revenue has been increasing over the last 3 years. The operating income, which is really just the gross profit, has been steady over the last 3 years as well. Net income for 2019 is fairly similar to what we saw in 2018. We can see a large drop from 2017 to 2018, but it should be noted that this was due to a deferred income tax recovery of $1.764 billion due to a change that lowered the US federal corporate income tax rate. I know that sounded a little complicated, but essentially what has happened was the US government has returned a large amount of tax previously paid by CNR, which was then reflected in the 2017 net income. Moving on to the balance sheet, we can see that current assets have been growing over the last 4 years. We can say the same about the non-current assets, so overall the total assets have been increasing over the past 4 years. Total current liabilities has been increasing over the last 4 years. There has been a large increase from 2018 to 2019, and this is due to the current debt. Total non-current liabilities has also been increasing. This is due to the long-term debt. This kind of industry is very capital intensive, so we do expect these companies to hold a lot of debt. And as we can see, total liabilities has been increasing over the last 4 years. Looking at the debt to asset ratio, we get the total liabilities, we divide that by the total assets, and we get 0.59. This is slightly higher than what we usually look for in a company. Once you go above 0.6, it is a little worrying that you may not be able to pay off your debt. However, as a railway company in a very capital intensive industry, this is to be expected. Recently, CN has come out and said that they do have the best investment grade credit rating in the industry, which means I'm fairly confident that they will be able to secure loans and acquire more debt to help continue to grow the company. Jumping on into the cash flow, please note we are looking at this from a quarterly basis. So here we have the past 3 quarters. We can see that decrease in net income significantly from first and second quarter. However, it is great to see that net cash from operating activities has increased from Q1 to Q2. This is partly due to accounts receivable improving with CNR's customers paying what is owed. CNR has pulled back on their investment activities. This is due to the cutback in investing in properties, plants, and equipment, and also they have made no acquisitions in the first and second quarter. It's also great to know that CNR has cut back on their share buyback program, ensuring that the company does have cash while still paying their dividends. So we can see that what we've discussed has led to free cash flow improving significantly from the end of the first quarter. They now have over $1 billion in cash, which is almost 2 times as much as what they previously were holding. Here we have JJ, the CEO of CN, the shot caller, the big boss, who can clean himself up or dress himself down to get the job done. And he's well aware that even though CNR has had great success in the past, he's looking towards the future saying, what's next, buddy? And when we're talking projects, we're talking the intermodal of the future. And you heard it here first from the man himself, JJ, saying we're improving, optimizing, making sure we're as productive as possible to increase those profit margins. Jumping on over to top shareholders, we can see Cascade Investments owns 14.28%. Many institutions in here, but you get down the bottom and you may recognize my homie, my good pal, my brother from another mother, Bill Gates, sliding in on here, 2.41% ownership of the company. That's $2.2 billion in value, which equates to a whopping 7.52% of Big Bill's whole portfolio. Now that's a money move. So my closing thoughts on CNR is they have a strong outlook looking to the future of a growing population and economy. They're very well situated to take advantage of the expected growth throughout North America in the coming years. They're well diversified in the logistics industry, with their trucking and supply chain services, distribution, customs brokerage, freight forwarding, marine shipping, storage space, really make them a one-stop shop for their customers. Finally, I believe their valuable assets are just impossible to replicate. I really don't see anybody able to make a network of rail lines like they have, which really makes it difficult for competitors to enter the industry, let alone compete. All this being said, is CN a buy right now? It is important to note that the stock is at an all-time high right now, but as a long-term investor, I think that there are many more highs to come. Me personally, I'll be waiting for a pullback before I add to my position. If you made it to this point of the video, you're definitely an avid saver and investor. Did you know that if the interest rate for your savings account isn't higher than the inflation rate in your country, you are losing money every minute you keep cash there? I created a video explaining this concept and shared the best financial tip I've ever received that will help boost and protect your hard-earned savings. Click the video on the screen right now so you too are able to implement this simple but effective strategy. That's all for today. Remember to like, comment, and subscribe to see videos similar to this one. This has been the Financial Future Guide. I'm your guy, and I'm your guide.